So welcome to our webinar, Using Your Downtime to Improve Your Business. My name's Lucy, I'm the Operations Manager at Fine Company. I'll be moderating today, so if you've got any questions at all, just submit your questions into the chat box and we'll go through as many as we can at the end of the webinar. So I'd like to introduce you to Hayley Robins from Hive Business. Take it away, Hayley.
Thank you, Lucy, and thanks to everyone for joining. As Lucy said, I'm Hayley and I run the accountancy division of the Hive Business and Fine Company Group. So I'm a chartered accountant. I've been working with dentists for about 12 years now. Over the last few weeks, kind of as a group, we've dealt with, hundreds of kind of clients, kind of come to terms with what's been going on. And kind of through that process we tried to pool our knowledge basically and have come up with a phased attack really, which is stabilize, protect and regenerate. So this webinar is going to focus on using your downtime to improve your business and should help with some of the practicalities of this and kind of focusing on the financial infrastructure really and getting that in place so that we can proceed with the strategy. So I am just going to share my screen with you briefly, so bear with me. So hopefully you can all see my screen now. So I think you'll all agree that the only constant over the last couple of weeks has been change. We've been bombarded with information on a daily basis, whether that be clinical, what treatments you can provide down to kind of eventual closure, and also all sorts of financial measures that have been put in place. And then we've kind of been drip fed some of the detail about kind of how they're going to be implemented. So yesterday we had the opening of the furlough scheme. So there's been kind of lots to digest. However, I think the dust has somewhat settled now. So we've got some clarity over trading. So we know that things are shut down. And we've got some clarity over what support we're going to be able to access. So we obviously still don't know how long this is going to go on for, how we're going to come out of lockdown and what that's going to look like. But at this point in time, I think it's about kind of focusing energy on the things we can control. So it's a really good opportunity for dentists to have this downtime because it's a period when you can really do all those things that you never get the chance to do because you're in clinic. So the kind of first place to start is to really start to understand your business model. And by business model, I'm not talking about kind of cash that's coming into the bank, cash that's out of the bank, and we'll kind of move on to that because that is also very important at this time. But it's about understanding the true financial model behind your business. So what makes it profitable? What associates are profitable for you, those of which that may be loss-making, your support staff, are you kind of over-resourced, are you under-resourced, do you know what percentage of your turnover you should be allocating to your wage bill each month? That sort of information that you've probably never had to kind of sit and think about before because in dentistry, we're kind of very cash rich. So that combined with the fact that kind of principals are also clinicians can mask the business model because if there's not a cash deficit or any pressure on cash, you're kind of quite comfortable and there's not any kind of reason necessarily to have drilled down into your financial model before. However, given kind of what's going on and the business that you left is not going to be the business that you walk back into, it's really important that we kind of spend this time now and look at the underlying model. So this is a tool that we have looked at Hive, and I recognise some of the names that are watching, so this won't be unfamiliar to you. But for those of you that kind of are new to Hive, this is basically an alternative way of presenting the profit and loss account, I guess. So we've got the kind of spending of the practice, kind of split into the various different sections. So your direct costs, like your lab fees, materials, payments to associates, and then you've got your kind of fixed costs of running the practice. So your fixed wages, your premises cost, to hopefully leave this little segment, which is profit. Now, what we do when we're modelling a business is we make one important change, and that is this slice here. So this is basically an amount that you wouldn't usually see on a profit and loss. It's the amount that the principals should be paid for their clinical time. And quite often when we kind of start working with clients, we'll kind of we'll generate this pie chart, and as soon as we plug this section in here, this profit section either minimises or it's non-existent, and that's usually because the principal is subsidising the business in some form. So if you were to put it another way, if this practice were to be associate-led, it would be loss-making rather than profit-making. So why do we do this? We do this because it's important to understand the kind of true position of the business. It's also an important tool to benchmark against other businesses. So we obviously get to do this analysis in a lot of different practices. So to us, we know, for instance, that your fixed wage bill shouldn't be any greater than kind of 17 to 20%. If it is, then there's probably spending that need to be there on your support staff. There might be kind of infrastructure issues. And likewise, we kind of know what sorts of percentages to expect. So we know if a practice does a lot of implants or Invisalign, for example, then their lab fees would be higher than usual. So for general practice, we'd expect 7%. So this practice, for instance, has a higher lab bills, which might be because of the treatments they provide, but also might be because they're overspending and they haven't negotiated discounts with the suppliers. So it's important as a starting point to understand what your business has looked like, because you need to know how all of these sections work together so that you can maneuver and navigate your way through this period of change when you're going to have to be leaner and meaner than you've ever had done before and make really difficult decisions. For instance, this fixed wage bill is your staff as they were when you left the practice. That's 18% of turnover, but obviously if your turnover's shrunk, then to protect that profit margin and the whole pie as a whole as a business, you might need to do some kind of take some action to reduce that staffing level. But without understanding your model and how you get the information, you kind of need to know that first before you can start kind of using it to base any decisions from. So how do we get to this pie chart? You basically need a combination of reliable data as to who's generating what income, and that should come from your front desk software. So that's important because we need to know how much of the income is generated from the principal. And the second thing that we need to do is make sure we have really good quality cloud-based bookkeeping. Now, some of you might already have this in place. There are providers, well, there's a few different providers now. We predominantly work with Xero, but you may have heard there's QuickBooks Online. They've got adverts on TV at the moment. They're all kind of much of a muchness, but their key benefits are that they are targeted at the business owners. So whereas previously kind of bookkeeping was very much left to a bookkeeper or your accountant, the software was designed for them. This is trying to encourage business owners to really do more themselves, kind of get stuck into the books and understand them a little bit more. So they're very intuitive. And they're designed to save time. So they have things like bank feeds, so there's no kind of data entry as such. It's as automated as it can be. So you may already have Xero in place. It may be someone else that kind of keeps it up to date for you. It might be your practice manager, which at the moment they may be furloughed. So you at the moment you don't know if you've got up to date bookkeeping. It might be that you haven't had anything since your last set of accounts. And this applies to associates just as much as it applies to practice owners. So associates, it's really important for you to know what income you've earned last year, what your profit is, can you do anything to reduce that profit, what's your tax bill going to be, so that you can start kind of doing some personal budgeting as well. So if you bear with me a second, I'm just going to give you a brief overview of some of the functionality of Xero. So I've just stopped sharing my screen for a second. I'm just going to start sharing a different screen now. So hopefully, for obvious confidentiality reasons, I've had to use the demo company that's available on Xero. So this isn't kind of dental specific, but it gives you kind of a brief overview of some of the functionality. So I know some of you on here are already familiar with Xero, so apologies for kind of going over this again. But it basically, it has a function called a bank feed, which means that it automatically links to your bank account, and all of these transactions down the left-hand side of the screen are automatically pulled in. So all it requires you to do each month, or if you've got a backlog, kind of go back from when your last set of accounts were prepared for you, is basically tell Xero what things are. So for instance, down here, we've got some city parking. You just type in who the payment is to. You choose what type of payment it is, and you can add some additional details. So it may have been parking for a course, for instance. You then press OK. That transaction's disappeared. So that's what we call reconciled for you, which basically means that it's been fed through to the reporting section of Xero. Xero also starts to build up a memory. So it, I don't find any examples on here, but it would start to pre-fill this information for you. So you just have to write OK. There are also functions like bank rules, so that Xero automatically looks at your bank account, recognises that the payment is to 7-Eleven, and suggests what you might want to post that as. So it's just a case going through and reconciling this information. Xero then feeds this through to the reporting section, and this is why I probably prefer Xero to some of the other providers. It's really easy to use, and it's really malleable as well. So it has standard templates, like it has an annual profit and loss that you can access for any data period, which basically gives you the information that you need to then plug into your pie chart. You can also run a similar monthly report. So you can see month on month how things change, what your expenses are. And if you want to know any additional detail, it's really easy to use and drill down into the detail. So we want to know what that £7,000 is made up from. Just a case of clicking on the figure and you can see the breakdown behind. And Xero also has the function to build template reports. So these are the standard reports. You can also run a template report, which we use our own kind of dental template, which we extract data straight from Xero and can produce a pie chart quite efficiently as well. So I'm just going to stop sharing again, go back to my original screen. So once we've got our cloud-based bookkeeping in place, we've had a chance to run that profit and loss, maybe run the monthly profit and loss, get to grips with kind of what comes in, what goes out of the business on a monthly basis. My next advice would be to make sure that you've fully digested and downloaded all the different forms of support that are available to you. These have been changing over the kind of last 2 or 3 weeks on a daily basis. So we have set up it's a dedicated Corona page on our website, which basically highlights all the types of support, particularly for dentists, and we've been updating that. So it's hopefully all the information in one place. So definitely kind of go and have a read of that if you haven't done so already. Then once we've got some clarity over what the expenses are and what reliefs are available, I would definitely be preparing a cash flow. This doesn't have to be anything complex. It's just the cash coming in and the cash going out over a monthly basis. I've been doing forecasting for a period of 6 months, because although we know there will be change over that period, I think it's a good starting point to get kind of to pin down your cost base over that 6 months, to kind of give yourself some comfort that if we know income's dramatically reduced, does that still cover the expenditure of the practice, and what is that cash deficit going to be if there is a deficit? It would also be needed for things like if you're looking for one of the corona loans, they would want a cash flow forecast from you. But even if you're not looking for additional finance, I definitely think it's a step you need as a bridge between shutdown and kind of when we're looking to reopen again. So each cash flow will obviously look different depending on the business. NHS and private cash flows will look differently, as mixed practices as well. Obviously entitled to different sorts of help and different income. But if we're kind of focusing on the private side, then what we're seeing from most of our practices is that they've got kind of a steady stream of plan income. Given it might have reduced a little bit because patients may have requested payment holidays or may have cancelled, but there's still usually a chunk of fixed income each month that's coming into the forecast. So we feed that into our template that we've got. We then look at the direct costs, so the things like lab bills and materials, which obviously now you won't be incurring any. But you may well have your bills that relate to the March income that you need to pay. So I definitely recommend going and seeing if you can negotiate any payment terms with the suppliers on those. Then I suppose the major thing to feed into your cash flow is your wage cost. So the furlough help, if you're fully furloughing staff, will leave you in kind of a net position. You won't have kind of lost any funds from that. However, there will be a cash flow position because you've more than likely now paid the staff wages and you're yet to be reimbursed the government funding. So understanding the impact of that. So speak to your payroll provider or your accountant. If you've got someone else that does your payroll, they'll be able to advise you on the impact for you. The other suggestion, if you haven't already done so, would be to seek loan and HP repayment holidays. HP, we're tending to find that clients are receiving kind of 3-month repayment holidays, and then with bank loans it's kind of up to 6 months, but they still expect you to pay the interest, so your monthly payment will reduce, but it kind of won't go away completely. And then we have the usual kind of premises costs that we can't kind of escape. So the cost base of the practice, even though shut, will never be nil, but what we're tending to find is that private plan income is covering that to leave the business in a break-even situation. Obviously what that doesn't then account for is your personal drawings. So depending on the cash reserves already in the business, it might be that you can still kind of afford to draw on those cash reserves for the next few months. Or it might be that you need to kind of look in different avenues. So the self-employment support hasn't been that helpful for dentists, but there are kind of other measures, such as they've deferred the tax payment, which might allow you to draw on other savings in the short term. But each of those decisions is kind of bespoke and needs to fit your circumstances. But I think kind of delineating between the business cash flow and your personal cash flow at this stage is really important. So what I have got here is just a visual representation really of the cash flow that we have seen. I've done a number of forecasts for clients over the last couple of weeks. And although the kind of the amounts will vary dramatically, the general trend in the cash flow has been pretty consistent. So we have obviously positive cash flow here and then dipping into the negative. So this is assuming there's no kind of amount in the bank, there's no buffer. We're seeing kind of a dip in month one because that's when the wage bill will come out. That's when the last lab and material invoices will need to be paid. We're then seeing a cash increase in May due to the furlough reclaim from April, and May's been compensated by this point. And then we're seeing kind of a plateau as the plan income kind of covers the reduced costs. And I would say there is an exercise to reduce those costs. It's going through each one of your suppliers and deferring payments, maybe pausing IT support, that sort of thing, reeling back every expense that you can. And then we're assuming that the repayment holidays will start to come to an end, and that's kind of when the cash deficit kind of raises its head a little bit. But as I said, this is a 6-month forecast. We don't know what's going to be happening kind of June, July sort of time. But I think if you've got a template there which you understand and you understand where the figures have come from, as and when we know more, you can adapt that to your situation and move forward. So one of the big cash flows is obviously your tax payments. So the government have put pressure on HMRC to provide some flexibility basically in relation to your taxes. So currently corporation tax and PAYE are still due. However, HMRC have set up the time to pay service. So they basically said if you phone their helpline, let them know that you've been affected by Corona, it's affected your cash flow. There will be no late payment penalties. However, they will still apply their usual rates of interest on any payments that haven't been made on time. However, the situation for self-assessment is slightly different in that they have said by default we won't kind of ask you to pay your July payment on account. Usually, obviously, personal tax you pay January and July each year. But I just wanted to kind of touch on that point a little bit more, because this is obviously our original position. So had the coronavirus not hit, then we would be making a payment on account in July. We'd have a little catch-up payment to make in January and another payment on account to make that same January, with another payment on account to make this time next year. However, the default position now is that you don't make any payment in July. However, that exact payment just falls due again in January. So obviously this is a big amount. To fully calculate what this will be, I would advise getting your tax return in as soon as possible. This orange amount is basically your tax liability for the tax year that's just ended. So if you were to get your records into your accountant, you can have real clarity on what amount will be, and kind of well in advance of the payment deadline to kind of help with your personal budgeting. And it may be that you've got a pot of money that's set aside for tax that you might now be able to dip into. However, the other point that I wanted to raise was that these two grey amounts are purely estimates. So they are in effect what HMRC think your tax liability for the year ended April 21 will be. Obviously, the year ended April 21, your income's going to be heavily impacted by what's going on, and they're assuming that your income will be the same as the year ended April 20, which it won't be. So I think I'm just raising that you can elect to reduce those payments. So again, have a discussion with your accountant, but it will impact the amount that you actually have to part with in January 21 and July 21. So kind of sticking with tax a little bit more, this has always been really important to us. Obviously, I'm an accountant, so kind of saving tax and kind of structuring things is my day job, but I think now more than ever we're going to be wanting to get the most from our work as possible. The kind of tax regime has changed a lot in the last 5 years, and HMRC have done quite a good job of kind of tightening the screw, and you have to work harder than ever before to kind of get the savings, but they are still there. So kind of take this time to have those conversations with your accountant to kind of see if you're structured in the right way. And my number one bit of advice, if you're not already, would be to look at an incorporation. So that's trading through a limited company. There used to be inherent tax savings of incorporation. So just as trading as a limited company, you'd automatically save tax. The rules that HMRC have gradually implemented over the last couple of years have eroded that. But it doesn't mean that the options aren't still there. So as a sole trader, you're very limited in what you can do to mitigate your tax bill. But as a company, there's lots of things you can do. We could look at some family restructuring, so incorporating your spouse into the structure of the company. And especially if they've got no income, that means that they can draw up to 50k at a tax rate of 25%, rather than it falling on you at maybe 42.5%, 45%. If you were looking to buy an electric vehicle, which I know maybe not right now, but there's kind of huge tax savings in doing that through a limited company. Pension contributions, maybe not the best time for that, but a company would give you the flexibility of that to be very efficient in increasing your pension pot. Tax efficient insurances. So by default, a lot of the insurances that you would tend to pay wouldn't be deemed deductible by HMRC. However, we work with an IFA that has it's structured in a particular way using a company that means that it is tax deductible for you. And I guess the tool that we use to run through your finances and to make sure things are being paid from the right pot and in the most efficient manner is to do a budget appraisal. However, this now probably at this point in time has kind of a twofold benefit, because we'll need to see how much you need to live off, kind of going through your personal expenditure, looking from a personal perspective to see how can we reduce that over the short term if it means that you can't draw any money from your, so things like deferring personal mortgages, looking at any savings that you make, any pension contributions that you make, seeing what the company can pay for you rather than you having to pay out of your personal pocket. So we have kind of touched upon, I guess, the financial infrastructure related to stabilisation. That's about getting your books up to date, getting clarity over your business, and identifying supports available. Then moving into kind of the protection phase is the cash flow. So doing everything you can to effectively put your practice on ice. So you're reducing all your levels of expenditure. You're deferring any kind of debt repayments. You're really limiting the cash outflow at this point in time to be as close to a break-even point as you can. And then we want to move on to the regeneration phase. So we have well, this is Hive Intelligence. So it's kind of a product that we've designed, but it's essentially 6 KPIs that we think you should be tracking. And they're probably more important now than they ever have been as you try and maneuver your way through kind of the opening of your practice again. So if I just touch upon them, the cumulative EBIT is in effect the pie chart that we started with. So basically tracking the profit section of that pie chart, which is obviously important because if we go back to, if you kind of the same business model that you had and apply it to when we're opening the practice again, revenue is going to have diminished, and the first thing that will go if you don't make any changes will be that profit segment. So it's really important that you track that on a monthly basis to ensure that you're in effect reducing the other segments accordingly of that pie chart to protect that profit segment. We then have new patient source, and we think it's really important to track where your new patients come from, whether it's Facebook, referral, Google, because I think it's really easy to anecdotally have an opinion on these sorts of things, but it's really important that you actually have the facts to base where you're putting your marketing investment and to monitor the return you're getting on everything. ADY is the average daily yield of clinicians. So also important if you're an associate and you're watching this, this is the amount that you gross. Patient value, we have the orange line is the average new patient value, which you would want to be as high as possible. And I know my colleagues in the marketing division are working on a strategy to try and kind of fill the books of those high-end treatments so you return to full books, basically. And then the black line is the trend of the average patient value, which you would want to be increasing, but I think at the moment it's just to try and keep stable. We then have the conversion rates of clinicians. Again, important for principals and for associates. It would be really important tracking which of your associates are converting the leads and which are not, if you're having to make difficult decisions with pay rates and dividing the book, basically. And then final, we have practice growth. So this is basically the number of new patients and then the number of patients that have left. So this again is important as you're kind of starting to build your book. You may have lost some planned patients, or I think this area will be quite disrupted. There may be some practices that don't make it, so there'll be kind of patients that are looking for a new home. So that is about all I had to say at the moment, but I'm obviously here to answer any questions that anyone has. I'll stop reading now.
Hi Hayley, thank you. That was really interesting. Thank you. So we've had a couple of questions that have just come through. So the first one was about their bookkeeper uses Xero, but I've not seen it. How do I get access to it?
So if you have a Xero account, then all your bookkeeper will need to do is they'll need to invite you to access the Xero. So they'll basically just need to update a setting within that. You'll get an email from Xero to log in. So if you haven't already set up a password, it'll just ask you to do that, and then you'll see the same screen as that I showed you. You just go to the reporting section to have a little look around.
Okay, and then there was another one as well. So are you able to show us the charting feature on Xero?
What do you mean by the charting feature?
I can just find out.
Sorry, I might be referring to it as something else.
You said there were some quick charts that you can get from the profit and loss sheet.
Okay. I don't know if the demo will have it, but basically, let me share my screen a minute. You can, so if you go to accounting and reports, there's a number of reports that are already set up. So there's some track what invoices you need to pay. There's a profit and loss, there's a statement of cash flows in there, but you can take a profit and loss. You can adapt it here, and then in the report section, so you can make custom reports. This is the demo company, so I can't show you the custom reports on here, but it basically, you can take the profit and loss account and you can edit it, and you can say, okay, I want the profit and loss account, but I want to extract, say anything that's to do with the principal. So I want to see the profit of the company, but I don't want to include the principal's insurances, the principal's subscriptions. and then it will just appear in the custom. Unfortunately, I can't show you our custom reports because it would require us going into a client zero, which obviously I can't do at the moment. But if I can send a template over, if that would help someone just to kind of see the reports that we produce.
Yeah, definitely. So I'll put you in touch with the person that it is that's asked that question. So there's just one more question that came through. So I don't have to pay my tax in July, but will HMRC expect all of it in January?
They will, well, currently as it stands, all they've announced is that they will defer the July payment. Obviously, as you would have seen, that just means that there is a bigger payment that's due in January. Whether as the situation evolves, they'll put more measures in place, because obviously they'll understand that it's still not that huge amount of time if someone's had to live off their tax savings for them to be able to save it again. But at the moment, it's just the July payment that's been deferred.
Okay, lovely. So there's no other questions that are coming through. So this webinar's been recorded, so I'll send it out to everyone that's attended. And if you have any further questions, as Hayley said, please do get in touch and we'll do our best to answer them all. So thank you very much for joining us today.
Thank you. Bye.